Hey, this is Matt from InvestiQuant. Today is Tuesday, March 29, 2022. Yesterday, the markets had an early dip and then rallied all the way through the afternoon session and into the close. And we ended up with what's called a neutral extreme up day, which is a market profile term for a day that breaks both the high and low made in the first 60 minutes of trading and then closes on one of those extremes. So yesterday it closed on the upper extreme, making it a neutral extreme up day. Let me go ahead and select all four instruments, and we will look at a pattern using that neutral extreme up day from the market profile section. All right, I've got the setup at intraday open and long, which means this is going to be looking at entering at 9:30 a.m. Eastern time and exiting at 4:15 p.m. Eastern time. Now, currently the market is pushing higher in the overnight session. We're continuing higher from that afternoon rally. So I'm going to go to the gap direction and click on gap up. The next thing I'm going to do is go to Price Patterns Library, and I'm going to put a little bit of context around just how strong yesterday was by saying that it closed at the highest closing price of the past 10 days. I can grab that from the Active Today section. You can see new highs. We've got a bunch of new highs here. I could use a 5, 10, or 20. I'm going to pick the 10 just to put it somewhere in between the 5 and 10, which means it's going to have more samples than the 20 day high close would have, but less than the 5, and still kind of capture that idea. So I'm going to go with that one. And then I'm also going to say yesterday closed above the open, and that's important for the neutral extreme pattern to say that it was neutral extreme up. I need to add that. All right, next I'm going to go to profile patterns, grab that neutral extreme day, which is from the Active Today. It's that top option, neutral extreme there. That combined with the close above the open makes it a neutral extreme up day. And then lastly, I'm going to go to the indicators library and put us above a 10 and 200 day simple moving average, and then click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern time, exiting at 4:15 p.m. Eastern time, when you gap up following a neutral extreme up day that closed at a 10-day high above a 10 and 200 day simple moving average. Historically, we've got 59 samples in the S&P, 66 in the NASDAQ, 55 in the Dow, 127 in the Russell. Many more samples there. If we go to the win rates, you'll see that the S&P has a favorable win rate here compared to the others. It's the only one that's kind of strong here at 63%. The NASDAQ, 58%. Dow, very neutral at 51. Russell, 51 as well. If we look at the average moves, S&P average win larger than the average loss. For the NASDAQ, they're very similar in size. For the Dow, the average win larger than the average loss. And then the Russell, the average loss just a little bit larger than the average win. So 3 of the 4 have, or 2 of the 4, I should say, have average wins that are larger than the average loss. And then 2 of the 4 have average losses that are larger than the average wins. If we look at the win rates, just 2 out of 4 have win rates that are more favored than 50-50. So just slightly favorable, historically speaking, on this pattern. Hopefully you found that helpful. Good luck today. We'll see you next time.